You are a Fed insider, former deputy director. Give us a sense. What are you expecting from today? Not only from the decision, which most people think will leave rates unchanged, but maybe more importantly, the press conference and the statement. What are you expecting from that?
Well, you've nailed the right issues here. And in fact, at the top of the segment, you were saying that investors are looking for clues as to when the Fed might cut. And I think that fact is part of where Chair Powell and his colleagues need to be super careful in what they communicate and how they communicate, because the market really is looking for any signal that says cuts are coming sooner than might be priced. So we, like the market, don't think there's going to be a policy rate move today. Our baseline, in fact, is that the Fed doesn't cut rates until June. And so to get there, the market would have to reprice some. And so part of what I think Powell's strategy probably is going to be is to try to say, look, we didn't hike rates today. Inflation is coming down, but it is not at our target. It is not anywhere near our target. And in fact, if anything, we need a little bit more conviction that it's going to come down to our target. So to try to push back a little bit on all those expectations that a rate cut is imminent. I don't think he wants to be overly explicit. I don't think he wants to talk specifically about dates, because that would be more precision than he actually has. And so I think he wants to strike that confident tone, the slightly hawkish lean that they're committed to 2%, but then not get into any more details beyond that.
All right, so they don't want to get into any more detail. Also, we're seeing a kind of a change in conviction, at least from the market. The belief that we're going to see a lot of cuts next year. You pointed it out in your research. The market definitely rethinking their view of the cuts. Now seeing a Fed funds rate of 4.3%-ish by the end of 2024. That's a bit higher than previous, which was about just over 4%. What's leading to this change in thought?
I mean, this is one of the tricky parts for markets. Markets always want to take the most recent data and then extrapolate to try to get ahead of the curve. And so we've seen over the past several months lots of swings in terms of how the market is looking at the Fed, how the market is looking at other central banks, and how the market is looking at longer term interest rates. I think the inflation data have been a big driver here. Yesterday's print was very much in line with our expectations for a bit of a bounce off the bottom from the previous month's data. And so that kind of ping-ponging that we see with the data, it's never going to be as smooth in reality as forecasters would like. I think those sorts of ups and downs with the data are what are driving markets back and forth.
All right, so we also hit on something else when we introed you, Seth. Tomorrow, some people calling it Super Thursday, a bunch of other rate decisions. Does the Fed, do they keep that in mind as they make their decisions? Is that something that they're looking at, just the global environment when it comes to central banks?
So, my experience there at the Fed and then all of my conversations with central bankers around the world, everyone is aware of what's going on in other places, and other central banks in particular that have to worry about where their exchange rate is, pay a lot of attention, for example, to what the Fed is doing. But there's no outright coordination or anything like that. And from the Fed's perspective, they have a clear mandate. They're looking at the US economy. For the ECB, they have a clear mandate. They're looking at the euro area economy, especially inflation. And so they're aware of what's going on, but I don't really think any of that's going to make a huge difference in their decisions. For the ECB, for example, though, we think they, like the Fed, are on hold for the foreseeable future. They're going to need to see inflation continue to come down. And we see the ECB cutting in June, coincidentally, the same time as the Fed.
All right, Seth, I know we have you pulling on a lot of different threads. You've led us down some different paths, but I just want to button things up right here. Again, you said you're not forecasting any cuts until June of next year, but what are you expecting from this press conference, from the statement, from the dot plot? Are we going to see a slightly more dovish Fed in your mind, or do you think they just stay the course?
So I think there's going to be a lot that people are going to be able to pick, and it's going to be a little bit like a Rorschach test. Whatever you already had in your brain, you'll be able to see it reflected in what the Fed writes down. So when it comes to their own projections, for example, they're going to have to adjust down their forecast for inflation for this year. They've just been sort of overly pessimistic about how high inflation would be, and they're just going to have to correct that based on the data that have come in. I suspect some of that feeds through into their inflation forecast for next year, and so that's going to feel a little bit on the dovish side of things. Similarly, the last time they did a dot plot, they had one more hike in their dot plot for this year than is going to get realized, and so that's going to have to come down. So that's going to feel dovish. On the other hand, the unemployment rate is still low. They're going to have to acknowledge that it's low.
Yeah.
GDP growth is strong.